As I've mentioned before, there are a ton of different types of investments out there. Some of them are more known than others, but as far as an investment goes, what we're aiming for is a nice return. Hello guys, and welcome back to my channel. In today's video, we'll be going through an alternative type of investment, not in stocks, bonds, or real estate. Well, it actually kinda can be in real estate as well, but it is crowdfunding. Most of you guys have probably heard about this site called Kickstarter, which might be the most famous crowdfunding site. Here you can find a product which you believe in or you really like, and then you're able to invest in that specific product. In return, on Kickstarter, you'll often get the product for a better price than what the planned retail price is. This is where Kickstarter is a little bit different from other types of investments. Here, the investors won't invest in order to get a good return on their investment, but they invest in order to get some of the company's product for a better price. There are a lot of other sites like Kickstarter where you can request for a loan and then set an interest rate that will pay your loaners. So, not like Kickstarter where people would get a specific product, but here you'll pay them an interest rate instead. So your channel is about investing and you want us to take loans? Well, no, of course not. We will all be on the other side of these pages, and we will be the ones lending other people money. So when it comes to crowd lending, there are a lot of different sites out there. Most of them you're actually able to invest from as low as $1. So if you, even after watching this video, still doesn't exactly know how it works, try and make it a $10 deposit, a $100 deposit, just to learn the pages a little bit and see if it actually works as you want it to. Alright, so as I mentioned, there are a lot of sites out there. And that's what my first point will be about. It is about picking the right site. A lot of sites will brand themselves with a return of between 10 and 15% per year, some even more, which is pretty good compared to the stock market. This can, however, be a risky way of investing. And if the site you're investing on should go down, go bankrupt, you don't really have that much security to get your money back. Or it can at least be very hard to get them. This is also why it might be better to have a look into some of the bigger sites and maybe limit only to one or two different sites. They might offer you a little bit lower return, but let's be honest, wouldn't we all rather want that than risking losing all of our money? I'm not gonna tell you what site to pick, but some of the biggest sites I know of is Mintos and Bondora. But go and do some research yourself and find the site that fits you. I will be focusing mainly on Mintos simply because I just find it so easy to use and it seems like it can give you a pretty decent return. Alright, next point. How does it work? So now I've talked about the platforms, but really most of you guys are just here to find out how you can make money from it. So basically how it works is that people who need money can go to any of these sites and request for a loan. The type of loan will be stated on the site and will often be something like a business loan if someone have a smaller company that needs some capital and the interest rate in the bank is too high, then they can go on a site like Mintos and take a loan here. Alternative, it could be a car loan, a personal loan. There are many types of loan and what type will be stated so you'll know kind of what you're loaning money towards. When you're on the site and browsing through the different types of loan, you will also be able to see the interest rate. And some of these interest rates might look incredible, and yeah, they can be, but just keep in mind that when you're investing this way, you're dependable on someone else paying back their loans, and even a person you don't know at all. So it can be a risky affair, especially choosing some of the 20% or higher interest rate loans, which they're also stating on the side. The higher interest rate, the higher risk, which corresponds pretty well to most types of investments. And it's pretty obvious that someone who have to pay back an interest rate of 25% has a harder time paying back his loan than someone with an interest rate of just 5%. So now you kind of know how it works, but figuring out what loans to pick can be a hard choice, which is also why a lot of these sites has a set up portfolio management, where you can pick a lot of loans and then it will invest a small amount into every loan for you. So you're diversified, as I'm talking about all the time, but you're still able to pick what type of loans you want to invest in and with what interest rate and how many different loans you want. You can even set it to reinvest your dividends or payments so you get the full benefit from it. And this is with no extra cost actually. This is what Mintos calls auto invest. Here you choose your own strategy once and then afterwards they will do all the work for you. So being a passive investor, this is a great choice for you. If you don't want to pick your loans yourself even, there's also the invest and access choice. This is great if you want to make it super simple and always be able to access your money. You're not able to choose what kind of loans you want yourself, but it'll do it for you and make sure to diversify your portfolio. The last choice is where you simply just do all of it yourself. You find the loans you want to invest in, you find the interest rates, you figure out how much money you want to put into that specific loan, and all of it can be done by yourself. So kind of like picking your own stocks instead of choosing like a wider ETF. When it comes to choosing your loans though, I would recommend only choosing loans with a buyback guarantee. Most sites will have an option like this, and it is a form of security on your money. It is a guarantee issued by the loan originator to the investor for a particular loan that confirms the loan originator will repurchase the loan from the investor if that particular loan is delayed by more than 60 days. So here you will have somewhat of security on your loans. Now I talked a bunch about crowd lending and how you're able to make money just by lending your money to other people. Another way of doing this, if you want a little bit more insight in where your money goes, it could be done by crowd-funded real estate. This is, as the name states, real estate projects where the builders make a crowd-funded project. They will do all the hard work, all the paperwork, and all you'll need to do is put your money into this project. This is a different type of investment as well. And if you want to enter the real estate market and actually know what you're investing in, compared to like REITs, where it sometimes can be kind of hard to see where your money exactly goes towards, simply because they have so many buildings in that one particular thing, then crowdfunded real estate is a great option because here you can actually see what you're investing into. There's a lot of sites out there. Now I'm just showing one European site called Estate Guru. Here you can see the project. You can enter the different projects and see exactly what your money goes towards and some of the key numbers. You'll even, when you sign up, you'll be able to see all of the loan terms, so you'll have a deeper look into who you lend your money to and what your money goes towards. These will often give you an interest rate between 9 to 15%, which is still pretty decent compared to the overall stock market. And these investments also comes with a security of an actual building. The nice thing here is that you're actually able to take your car or plane, regarding to where you live, and go and see what your invested money goes into. These were some alternative types of investing. Let me know in the comment section down below what alternative investments you guys have and how big of a percentage of your portfolio do you have in these. And lastly, remember guys, you have to make your own research and no investment are secure. And if it sounds too good to be true, 9 out of 10 times it is. Thank you guys for watching. Remember to like the video and subscribe to my channel. See you next time.